Welcome to the second episode of our EUVC Podcast series, where we immerse ourselves in the South and Southeast Asia venture landscapes and explore venture strategies with co-host Ambika from Circle Capital. Today, we're joined by Dr. Tanuja Rajah, a PhD immunologist turned VC partner at MVP Venture Partners, who discovered something surprising about what it takes to win in Asian markets.
The market that you're playing in matters just as much than the team. We've seen great teams being wiped out simply because they were playing in a wrong arena.
Operating across the region, home to 25% of the world's population, Tanuja learned that picking great founders isn't enough.
One of the biggest learning was just how important ownership matters to make venture math work. You can't just rely on picking the winners.
Her portfolio reveals how successful funds navigate these markets differently.
PhDs layering AI on top of years and years of real patient data. All of this to build sort of like a 24/7 healthcare concierge.
From healthcare marketplaces to exit strategies designed for emerging fund realities.
We see the bulk of those M&As happening within the $30 to $100 million range. And so you kind of like reverse engineer that and say, where do I need to enter in order for those kind of exits to make sense for them?
So how do you separate yourself from the noise in the world's most competitive venture landscape?
Really thinking deeply about the strategy. How are you going to separate yourself from the noise in order to get access to the best teams?
In markets where even great teams can fail, Dr. Tanuja Rajah shows what it really takes to win. Find the full conversation only on the EUVC Podcast.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back to the EUVC Podcast, where we champion and connect European venture. Whether you're investing, fundraising, or building the next breakout firm, these are the conversations that move venture forward. Today, though, we're shifting our focus a bit to the east to deep dive into one of the most dynamic venture ecosystems in the globe. For that, we've got our special co-host, Ambika from Circle Capital. Ambika, thank you for joining me today.
Thanks for having me back, David. I'm super excited to be here with both of you today. For those of you joining us for the first time, on this South and Southeast Asia take, I look at early stage investments across the region from my vantage point here in Singapore. And I'm really excited because today we're joined by Tanuja Rajah, who's a partner with M Venture Partners, also based here in Singapore. But Tanuja is not your average VC. She studied medical biosciences and graduated with a PhD in immunology. Very excited to hear her take on the world of investing. And I'm going to turn this right over to you, Dr. Rajah. Tell us a little bit, about your background and what got you into venture capital.
Gosh, it's so funny to hear you say Dr. Rajah. My dad has this joke. He says, oh yeah, she's a doctor, but if you're sick, she can't really help you. But Ambika, David, so nice to be here. Thanks for having me on. Just maybe a very quick one on M Venture Partners before I dive into how I got here. MVP, or as we like to call it, is an early stage fund that's domiciled in Singapore, but we've been investing across Southeast Asia and India since 2020. We're currently on our third fund, and we like to back founders pretty much at day zero, sometimes -1 as well, because all they have is a deck and a team. And working with them across that 0 to 1, 1 to 10 journey. Myself and how I got to VC, look, when I was growing up, there wasn't this ecosystem in Southeast Asia. There was no such role as being a venture capitalist, right? And so I went off to university to study science, which is what I love to do. Love to uncover new information, love digging around and exploring, having an inquisitive mind. But while I was writing my thesis, I decided that I should start a startup. I think I was bitten by that bug while I was in Australia. I saw some tech companies coming out there. And when I returned to Malaysia, I thought, and Malaysia is home for me, by the way, I thought, let me just give this a shot. I knew nothing about building a company, like literally zero. I didn't know how to set up a website. I didn't know how to enable payments online. And this was back in 2009, to 2010. But I did it anyway. Learned a lot. And that was kind of my foray into this world. Needless to say, I made every mistake in the book, but I also learned a lot, like raising capital, building a team, expanding the business from Malaysia to Singapore, and all of that stuff. So yeah, that was my intro into this world, and I haven't looked back.
Tanuja, most people with your academic background that I know, at least, who are in venture are doing like life science focused investing, like heavy biotech, drug dev stuff, right? It's not really what you're doing as a firm, but also as an individual. Could you share a bit about your thinking around exciting vertical spaces, like with your background in immunology, that's super niche, right? How does that translate to the type of investments and companies that you're excited about backing today?
No, David, I don't get me wrong. I love that, deep tech stuff, right? I do think, however, that in markets like India and Southeast Asia, many of the biggest challenges aren't necessarily about new drugs. It's about access, building trust, and affordability. And so that's where we like to focus. We don't take any science risk at MVP, but we do back healthcare companies, those that are trying to solve the problems that I just mentioned, right? So it could be data ops, logistics problems within healthcare, could be a consumer experience problem as well. How do you create a 10-star experience for the patients? How do we build trust in this ecosystem overall? So that's kind of what we've been focusing on. I guess as a supplement to that was also just feel like it makes more sense in terms of fund timelines here. So, anything that requires clinical trials, FDA regulatory approvals, et cetera, just generally takes a lot longer. And so it's something that we've decided not to focus on.
And just for the listeners, just, to double click on it, Tanuja's focus in terms of geo, right? We're talking about India and Southeast Asia. So it's a bit different from our typical kind of content who's more focused on Europe, but this is also part of why we want to do these episodes, to share these differences and contrast these regions. I was very tempted to ask follow-up questions.
I'm there. Go ahead. Yeah. Follow-up question. Well, this is the question, but just more of a take on what David was telling us, that this is India and Southeast Asia. I thought perhaps it might be interesting to pick on that consumer angle and set the context here, because the consumer numbers in this part of the world are insane. I mean, do you want to talk a little bit about why that is so important for your thesis here?
Southeast Asia and India is home to 25% of the world's population. I mean, just that in itself is mind-blowing. Both these regions are kind of entering this golden age of rising affluence as well, in terms of consumerism and looking for better products and better services. You've got young population. You've got a population that's now engaged on the internet. Particularly in India, we see the country undergoing this fundamental shift in income and consumption patterns. GDP per capita in 2022 was about 2,300 or so US dollars. It's expected to hit 4,000 by 2030. I mean, that's insane. And people are more educated. They're wanting better things. They're wanting better products for themselves. They want to eat healthier. They want to live longer. They want to have access to everything that they see outside of Southeast Asia and India. And that's where we feel we can come in and really enable these tech companies to exist and serve.
I think that's super interesting, just to set some of the context. So, yeah.
Before we deep dive into healthcare in Southeast Asia and India, I wanted to ask you something I ask every single guest, which is your biggest learnings in venture. I think it's very interesting, particularly given your background. I think we've probably interviewed, 400, 500 VCs, generally speaking, right? And probably of those, 5 had your background. Right? So that's a very short amount. Academic background, I mean here. So what have been your biggest learnings in venture as someone coming from more academic kind of lab background into this weird world of venture? As you said, you learned it all by making all the mistakes.
I feel like my answer is going to be super basic. So for someone that comes from an investing background, they're probably going to hear this and go like, yeah, well, obviously. But because I didn't come from that background, I think for me, one of the biggest learning was just how important ownership matters to make venture math work. And I know everybody talks about it, but really making that corded strategy was important for us. You can't just rely on picking the winners. You have to ensure you've got meaningful stakes in them. And it's very hard to put into practice, like extremely difficult when you're an emerging fund manager that has limited brand power. We definitely didn't always get strong ownership in some of these exceptional founders building great companies. We decided in the first fund to do it anyway. And we had to fight our way into those rounds that were being led by these, bigger brand name firms, right? And in the process, found ourselves owning a very tiny piece of a really, really amazing company. We did that because we wanted to demonstrate that we had access to these exceptional founders. As our brand has become better known, and we have a bit more reputation and credibility in the market now, we've kind of steadily increased our ownership in our investments. And so today, whenever we go into rounds, we kind of ensure that we have that minimum stake that we're gunning for.
Can I ask you to kind of just expand a bit more on that? Because I think you said two interesting things. One is like how that learning affected basically, let's call it fund modeling in a way, right? Because fund size is strategy, you need to model that, blah, blah, and ownership plays a big role. So you shared that. But you also shared something that I also thought was really insightful, especially considering that the biggest chunk of our market is emerging managers, right? Which you made the decision as a firm where we're going to showcase access. And we're willing, if that means sacrificing the ideal ownership stake in the early days, that's kind of the strategy. Can you share a bit more light on the process there, going from first fund, you're now in third fund, if I recall correctly? Just share some insights there of how was it internally for also our listeners to kind of extract some learnings ideally.
Yeah, I mean, it was kind of a debate internally whether we wanted to do this. And by this, I mean have a smaller piece of a really amazing company in Fund 1 when we knew we wanted much, much more. Some people around the table said, no, we shouldn't do that. That's going to potentially mess up, venture, how math works for the fund. And then some people around the table were going, well, no, we want to showcase we have access to these founders, that we actually could get into these hotly contested rounds. I mean, some of these rounds were being led by these marquee names, right? And who are we? We're just like year one, no portfolio, like nothing really to shout about. So we had to convince the founders to accept our money. We had to showcase that we could bring value to the table, even though we were the tiny fund with no brand name. And now with a larger fund, we're able to do more. We support them not just with our network and expertise, advice, et cetera, but also with more capital, which has made it much easier for us to get to the ownership stakes that we've set our sights on.
Do you think to that effect that there's fewer VCs here, like it's a less crowded space than Europe is? So do you think that makes a difference in being an emerging fund manager here in this particular environment as well?
I can't compare whether there are fewer emerging managers here compared to Europe, but I think there are a lot of emerging fund managers here, and a lot in India. There's so many micro VCs as well, all playing at that early stage kind of space. And so you're not just fighting with some of the larger funds that have raised tons of money that are now saying, okay, I'll come a little down, make a few punts here and there, and then put a couple of million as these companies scale. So they've also entered into that early stage arena. But you've got micro funds, you've got angel investors, you've got family offices, and they're all playing in the same space that we are operating in. So being able to show that you can really value add when we had no brand name and nothing to call on was like difficult, honestly speaking. It's much easier for us now.
Yeah, there's an enormous number of angel investment groups that have popped up in this part of the world. I'll sort of just, as an aside, and I think compared to Europe and the US, there's probably more groups here than I've seen anywhere else in the world, which I think is a fascinating direction that venture capital is actually taking.
There's also been a lot of unicorn companies that have bloomed, especially in that 21, 22 height, right? And so a lot of those founders now are active angel investors themselves and giving back, which I think is great. But they're also now this new group of people that are actively investing in the early stage space.
Does the region have, let's not call it unicorns, because I think that's sometimes not the right way to think about it, but like big tech successes within this healthcare space already, or not yet?
I would argue there are few, but there are far and few between. There's not enough. And some of the more successful companies have actually had to, and here I'm talking about real biotech, medtech companies, have had to actually move outside of Southeast Asia and start operating in the US, in Australia, and Canada, and raising the bulk of their money from VCs abroad as well. There isn't, up until very recently, been a very strong deep tech investment community in Southeast Asia and India. That's definitely changing now. There are far more funds that are investing in real deep tech companies. The government is doing a lot as well. Government of Singapore is doing a lot to kind of this space. But I think, just rewind a couple of years ago, there was an opportunity for these companies to raise the kind of capital they needed to grow. And so they moved elsewhere to find the capital.
Yeah. What about more broadly? So health tech, digital health, telemedicine, kind of this more broad definition of health.
So that, I think we've had some successes for sure, but still, again, not a lot. And I think this is my personal point of view. Obviously, I'm sure there's some healthcare investors that are going to disagree. I don't think healthcare can exist in the online sphere alone in Southeast Asia and India. By that, I mean, I don't think that you can just be a pure digital health player. I think at some point you have to go offline. It's got to be that physical digital combination. And the reason why I say that is because I think at some point you need the physical presence to build trust with patients. So online can be a great way to get more eyeballs, customer acquisition initially, right? You hook them online, and then you it's not enough to sustain and not enough for you to build a big company.
I was going to say, I think we've seen a pattern in some of the types of health tech investments that we've previously seen. So I think there was initially a big group of sort of telemedicine, investments that were doing particularly well. How do you envision this change? Because I know we talked a little before about AI, now plugging in. And how does that start changing the landscape a little bit as well, in the way you see, making these investments and the kind of things you're looking at?
In how I view AI in healthcare, or how I view this kind of online, offline?
And how you view perhaps the next wave of investments. So we've been looking at, we've sort of seen a lot of great, wildly funded telemedicine, startups, for instance, I'd say in the last 5 years especially. Now I think that wave is petering down, and with this explosion of AI, do you think that there is a different theme coming up to some of the investments that you're seeing, or do you feel that AI plugs into general investments right across the space? I don't know. I'm just throwing this out here just to get your take on how you see that.
No, I mean, within the healthcare space, obviously I see AI obviously playing into all spectrums. So to talk about, we've seen companies that are using obviously AI, everything from drug discovery to even using AI for nutrition, like that whole gamut, right? I think we're just going to see more and more of that. And obviously AI medical scribes, and there's just so many companies out there. We aren't yet though making that, when I say we, MVP struggles to make these kind of investments, because I struggle to find the differentiation amongst most of the companies that we're seeing. So there are dozen medical scribes. When I speak to drug discovery companies, albeit they are far fewer than everything else that we are looking at, again, how proprietary is their data? How do they compare to some of the incumbents that are playing in this space as well? I think that's one of the interesting things when I look at AI, and something that we always keep at the back of our minds, right? Unlike some of the technologies that have come before, the internet, cloud, these all offered new distribution channels for companies, right? You go to market strategies for companies. AI is slightly different, and to a certain extent, I think incumbents might have a little bit of an edge. And we're always thinking okay, this is a wrapper, is this a shallow wrapper? Will the next iteration of the model be able to do what this company is doing today, therefore making it obsolete? And so we just have to be so mindful when we're looking at an AI company. Really, what are they bringing to the table that's unique is something that we keep. And it makes it very hard for us to pull the trigger on making investments in AI, though I know it's all the rage, right?
But I guess also, in the region, given we just talked before, the consumer angle here, right? Such a big opportunity, right? Even within healthcare, right? Is that also a reason why initially when I asked you about biotech, deep tech, drug dev, you're kind of, it's not really our focus. Is that part of the rationale behind it? And does this mean that the easy pickings, inverted commas there, right? That the easy pickings are actually more on the consumer side within healthcare and health tech and digital health and blah blah.
Yes and no. So there are pros and cons to investing in both these types of companies, right? Consumer companies, again, like, can anyone else be building this? Really, what's setting you apart? When it comes to more, and so distribution, it's just real operation, like hustle, right? To get this product out there and to be the best. When it comes to more deep tech healthcare investing, we always ask ourselves again, like, is this tech new? And how quickly is this new tech developing so that, someone else can just come and say, I've got a better version of what they're doing, right? Like, how quickly will they be, I guess, replaced by new technology and model? And so I think that's the challenge with investing in both, right? What we are seeing, so I can give you an example from the portfolio, right? Like, we have a company in Thailand called PhD, which is a healthcare market. It started out as a healthcare marketplace, doing something fairly simple, which is connecting patients in Thailand and Indonesia with clinics and hospitals for elective procedures, diagnostics, and op care, right? You can think of it as like a one-stop platform for comparing prices. You can book and schedule your surgeries, day surgeries, things like LASIK, all right, in even access financing. And they were really primarily solving the issue of trust. Where do I get the best treatments from the best doctor at the best price? But they've now evolved into so much more with AI. So HD is layering AI on top of this regionally trusted platform, using years and years of real patient data. So conversations that they've had with nurses before making a booking, finding out about X, Y, and Z, about procedures, transaction data. They've used all of this to build sort of like a chatbot that acts like a 24/7 healthcare concierge. And this AI can now handle everything from basic medical queries to scheduling, price estimates, etc., right? They're using this in-house now, but the idea isn't to keep it in-house. The idea is to productize this, offer it as a tool to hospitals and clinics. It's a smart wedge, right? Because they started as a consumer marketplace, is something we invest in, and now building this defensible vertical AI layer that generic LLMs can't easily replicate because of all the data that they have in-house.
Actually, what would be really interesting here, for me especially, I don't know if, David, you might also be able to help tie the dots on some of this, but do you feel that Europe and Asia have a lot of similar types of startups in this particular space? I mean, Tanuja, do you see a lot of these businesses being able to scale into Europe? And David, do you, by virtue of that, see a lot of them being, able to enter that market?
I'm happy to take it first. So my background, I don't do VC investing anymore, right? My background was more on the biotech actually side. So that's where I started. And so the playbook is quite simple, right? And Tanuja kind of hinted to it in the beginning. It's really about that regulatory pathway, right? We have great science in Europe. Depends which country you are. You might argue your country is best. Doesn't really matter. We have great science. We have great talent. But typically when we market things, we have to go into the US. The story behind the COVID vaccine, right? European kind of founders, but it was really launched in the US. So on the biotech side, that's really the path that I see. And there's of course exceptions. I also, on the tech bio scene, it's not my area of expertise, but some of the companies I know the closest have been very successful in that US transition. And that's really what's given them the status. So that's kind of what I see. But I think my blind spot is probably more this digital health kind of space side in Europe, which is not really something I understand in detail.
Again, it would depend. So a company like HD, which is using very localized data sets, would find it difficult to enter any other country. They would almost have to build that from scratch. You have other digital health companies, however, another one from our portfolio that's building a digital twin for diabetes. That is something that can easily be translated or, taken over to other markets very easy, because the AI model just works on the data that's fed into it from patient data, right? So whoever is using the data, you have a CGM, et cetera, et cetera. It works on that for 2-3 weeks, and then basically the digital twin works. So it really depends.
So it's quite interesting, I think, just how we can leverage some of the cross-border transactionality of some of these businesses. So it's a conversation I think that we would return to once we see more evolving in the AI space, especially, I think.
I wanted to ask you, Tanuja, you mentioned, the portfolio example, kind of a B2C focused play, and now shifting into more B2B. It's quite interesting. Would you venture say that's kind of the playbook for the region, like because of the volume of the consumer, or is it also a maturity thing of the ecosystem?
I think we see a lot of companies start out B2C. It's just much faster for them to scale and get that revenue growing. It's super, super long sales cycles when it comes to B2B, and it's a very relationship based. So the person that you're speaking to in the company leaves that role. You start from day zero all over again. You've got these like additional complexities of doing business here. But I think we're seeing more and more of that, like as in we see more of the companies that might have started off with B2C and now also doing B2B or B2B. Definitely. I mean, it is the most stable income route, right, for them.
What's the follow-on capital that you're seeing on your companies? Is it US? Is it European? Is it Asian? Where's the follow-on capital coming? Because you're early stage, as you said.
Most follow-on capital is coming from within Southeast Asia and India. So, the later stage funds that are here, the Series A, D funds are investing into our companies. We saw a little bit of activity from the US in 21, but that was the hype, right? And they've now kind of exited. So you have the local players really that are here.
And do you find that South Asia and Southeast Asia have a lot of differences in the way some of these investments in your portfolio play out? Or do you think that the crossover is strong enough here?
Do you mean a company starting in Southeast Asia also now looking at India as a market and vice versa?
Well, raising capital. So, because South Asia is such a different market from Southeast Asia. And I think that's also one thing that is a play. They're both very, very different markets. So, you're covering this entire region and then you're looking to follow on capital. How do you find that playing between the two regions especially?
I can talk about how things were like a year or two ago and how I see things, how I think things have evolved. A year or two ago, Southeast Asia was all the rage and India also. And it was quite separate. You had a lot of VCs in Southeast Asia that were like, I'm Southeast Asia only. And not even Southeast Asia only. I'm Indonesia only. I'm Vietnamese. I'm from Vietnam only. I'm from Philippines only, right? And there is still some of that. And everyone in India was happy being in India only because obviously ginormous market. That's a little different today. I think, to put it politely, Southeast Asia is under a little bit of heat at the moment. The exit market is a little bit, it isn't the best, right? We haven't had the exits to shout about. And on top of that, you've had a few fraud cases that have become, big headline news, right? And so now I think you're seeing more and more VCs in Southeast Asia look outside Southeast Asia. The closest and biggest market is India and China. Not a lot of people are going to China. They're all going to India, or at least looking at India some way, shape, or form. They're looking at it. Not everyone is making an investment there. It is hard, right? If you don't have a team that's on the ground, you don't really have a network there, you don't understand, how the local market interacts with different products and services, you might end up making the wrong bet. But people are starting to dip their toes and educate themselves on India.
India is not for the uninitiated, I should say. So that was why, it's a differentiation.
I mean, I think we were chatting, Ambika, like even when I spent a couple of months there last year, it's extremely different. It's very different than doing business and investing in Southeast Asia.
Similar question, but more on, so we just spoke about follow-ons, right? And development of these assets, these companies. What about exits, right? And I guess we can talk about public IPO, but we can also talk about trade sale and M&A. I'd love to touch on it briefly. How do you see it? What are the challenges, opportunities, whatever, right?
It's because we have such a strong eye on exits that we are a true blue early stage fund, because I think that's the easiest way to generate outcomes for our LPs and for ourselves. And when I say that, it's like we are at least 10% of all funds. with the GPs. And so we have significant stake in each in the fund, and like basically are very, very motivated to create exits. And the way we look at it is to put it super simplistically, we invest at 3 to 5 valuation. If a company is raising a Series B or C round at a 30, 40, $50 million val, we can get out then. It's the easiest way for us to get out. We are also seeing some of the corporations end up buying or acquiring these companies. And in fact, we try to engineer some of that. So as the companies scale, we try to bring in a strategic investor that we think at one point in time could end up being a natural acquirer for said company. So we're not really looking at IPOs and gunning and hoping and praying for that. That would be lovely. But as a pre-seed investor, we are definitely engineering exits through M&As and secondaries.
Would you say that this approach of as you mentioned, right, there's a point at which you're very happy and comfortable in selling, and you probably modeled your fund based on that, and that's also how LP relationships were built. Would you say that approach is standard, or would you say it's your way at MVP of looking at things? And the reason I'm asking this is because what you said contrasts a lot with one specific view that we hear a lot in Europe. There's a different one as well. There's one specific view that is really hold on, right? Hold on to the assets. That's how you're going to make returns. And then there's kind of a hybrid view, which is probably closest to yours, and others, right? But what would you say for your region of the world? Are you like doing the standard approach, or are you a bit kind of controversial and contrarian in your way of thinking?
I'm not entirely sure, to be honest, whether we have taken a contrarian approach to what other funds are doing. I should ask them more. I definitely should. But our thinking is that companies are staying private for far, far longer than they used to. And it's harder for companies to go public here in Southeast Asia. It's a little easier in India, but there's not much opportunity here in Southeast Asia, and there's not that many retail investors that are investing in tech companies here as well. For us, it makes sense that we exit via secondaries or through M&As. And we see the bulk of those M&As, the bulk, obviously they're the big ones, happening within the $30 to $100 million range. And so you kind of like reverse engineer that and say, where do I need to enter in order for those kind of exits to make sense for the fund?
I think one of the trends that we are seeing here is a bigger desire, a bigger lean towards roll-ups. So the more startups that start, with this M&A acquisition process or just stay in their own private bubbles are getting rolled up by big private equity firms into larger groups. And I think a lot more people are hoping for that. But I will say that I think, there is a big push from the Singapore Stock Exchange, for example, to get more IPOs on there. And they're offering a lot more benefits to that opportunity. So I think I'm hearing of a bit of a mix of people who are hoping that startups do get IPO'd at the same time.
I think you're right. There's definitely a push for that now. And I think, government is stepping in to try and make that easier for tech companies as well. So hopefully we'll see this trend changing, but it'll take a few years.
Another question I love asking Tanuja to everyone is, what's a strongly held belief that you've recently had to change your mind on?
That being a great founder or a great team is enough to succeed. And I used to think that, if you're a great founder on a great mission and you had, complementary skill sets to build what you say you're going to build, you should have a pretty high chance of succeeding. Today, I think the market matters, or the space that you're playing in matters just as much, if not maybe more than the team. Because even with a strong founding team that knows how to pivot, if you're in a bad market, it's hard to escape. So we've seen great teams being wiped out simply because they were playing in the wrong arena. And I think zooming out, what I mean by this is I think great markets, what is a great market? When I say markets, I think great markets often have shifting dynamics that create room for new players, whether it's like falling costs, it could be new tech breakthrough, fresh distribution channels that we touched on earlier that enable more and more startups to bloom and grow. 15 years ago, people were skeptical about e-commerce companies, right? Questioning whether anyone would actually be willing to put their credit card deeds on a website. Take today, the AI infrastructure, right? 5 years ago, it was nearly impossible for a startup to build anything meaningful without massive capital and compute powers. But today, with open models, APIs, it's like anyone has a shot, right? So you have to look at that as well. And then just having a great team is just not enough. You can easily get trapped in a weak market.
I like to think of it as inflections, right? There's oftentimes market inflections that create opportunity. And I think that's kind of what you're hinting to. A lot have written very good books, much smarter people than me for sure, about that as well, right? But I think it's very insightful what you're saying. It's a great team, is a great starting point, but you also need to be thinking about, okay, what's the macro opportunity here within this market, this space, this industry, whatever. Yeah, very insightful. I agree.
To that end, I want to can I chuck in one extra question? And I just wondered, we've talked a little bit about you being an emerging fund manager. Now, if you were to give one piece of advice to someone in Southeast Asia looking to become an emerging fund manager today, what would you say?
Yeah, I have so many things because we've made so many mistakes as well. Like I have so many things that I could say. I was initially going to say, like, choose a team that you wish would be around 10 years from now, because they will be the future. And I think that's so important. But I think, like, really thinking deeply about the strategy as well. And I know that's obvious, but like, there are a lot of mega funds in Southeast Asia and India. They've 10x their AUM in the last few years. They're playing in almost every country in these two regions and every space and every sector, right? Like, how are you going to separate yourself from the noise in order to get access to the best teams? And by that, you have to have, it's your USP, right? Like, being clear on your USP as a VC.
That it's true. I think I think we've talked a bit about just having a lot of emerging fund managers appearing in this space as well. And USP is a challenge here. I think is also maybe different from what we see in the US and Europe.
I like that one. I wrote that one down. Tanuja, final question. What's the last book you read and that truly inspired you? And do share a bit about why it inspired you, how it inspired you. Was it personal inspiration? Was it professional? Was it a bit of both?
The Emperor of All Maladies by Siddhartha Mukherjee. Phenomenal doctor. It's a kind of biography of cancer in a way. And I was pulled to it because of my background in science, my degree in genetics and PhD in immunology. I found it like intellectually stimulating, but also deeply moving, just the way he writes it, right? Lots of personal stories of these patients and physicians, and showing how science progresses not in straight lines, which is really interesting. And now it's even more interesting to me because, and you probably know this, Siddhartha Mukherjee has actually teamed up with Reid Hoffman to launch, Manas AI, which is so cool. Like, I think this book is how old now? 10, 15 years old. It's like a full circle moment, right? It's just crazy. Like, from documenting that like long, painful battle against cancer in his book to now actually building tools that might hopefully cure this disease. So I felt it truly inspiring because the personal stories is like what was moving, but also wanting to do something that like drove impact. And one way is by building a company for sure and being in science, but hopefully we are also creating impact by investing in some of these companies.
There's a very famous saying, I should know top of mind who said it, I can't remember now, but it was something around the lines of, if you can't invent the future, finance it. And I think that's a great way to think it. As a venture investor, like, you should be backing people that you think are better than you, right? Honestly, let's
100%. They're smarter. They're definitely smarter. Yeah.
Yeah, awesome. Ambika, Tanuja, thank you for joining me. To our listeners, if you enjoyed this episode, remember to drop us a review, follow the pod, and subscribe. And don't forget to check out MVP Tanuja on LinkedIn and their website, and same with Ambika and Circle Capital on both LinkedIn and their website too. Thank you to the both of you.
Thank you.
Thank you. It's been lovely chatting.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.